the Vietnamese Dong in 2025, a rising star in the global currency market. Welcome back to the Iraqi Dinar RV channel, your reliable destination for insights on global currencies and financial trends. While we often focus on developments related to the Iraqi dinar, today we turn our attention to a different currency that's rapidly gaining traction: the Vietnamese Dong, VND. In 2025, this once overlooked currency is making headlines, and many experts believe it could be the next major player in emerging markets. If you've been searching for a high-potential opportunity in the world of Forex and global investment, the VND might just be worth a closer look. From local currency to global contender, for decades, the Vietnamese Dong was categorized as a non-convertible, low-interest currency, not often featured in mainstream investment conversations. But that perception is evolving quickly. Thanks to robust economic growth, increasing foreign investment, and a more proactive central bank, the VND is transitioning from a local means of exchange to a currency with broader appeal and stronger fundamentals. Investors are taking notice. What used to be an overlooked asset is now being reevaluated as an undervalued currency with real growth potential. In 2025, the world is waking up to the Dong's transformation, and the reasons are grounded in solid economic data. Economic growth. Driving confidence. Vietnam's economy has demonstrated impressive resilience and consistency, even amid global economic headwinds. Its GDP growth remains among the strongest in Southeast Asia, fueled by a healthy mix of manufacturing, exports, and a booming tech sector. International companies are continuing to relocate operations to Vietnam, drawn by its favorable labor market, supportive government policies, and strategic location. This inflow of foreign businesses and capital is naturally boosting demand for the VND. When multinational corporations set up shop and pay local employees, suppliers, and taxes in VND, it creates structural demand for the currency, which strengthens its value over time. A central bank that's gaining credibility. Another major shift in 2025 is the growing assertiveness and credibility of Vietnam's central bank, the State Bank of Vietnam. In a notable move earlier this year, the bank adjusted its reference rate for the Dong slightly upward. While the change was modest, it sent a strong signal to markets. The central bank views the currency as being undervalued and is preparing for potential appreciation. This type of gradual policy change suggests a slow march toward a more market-oriented exchange rate system. For international investors and traders, it's a promising sign. It indicates that Vietnam is ready to let the market play a bigger role in determining the value of its currency, increasing transparency and trust. A strong cushion. Vietnam's foreign reserves. Vietnam's foreign exchange reserves have also hit record levels in 2025, surpassing $120 billion. This is a critical factor in stabilizing a nation's currency, as high reserves allow the government to defend the Dong against volatility or speculative attacks. In simple terms, it's a sign of strong financial management. Such reserves offer not just a cushion, but also confidence, the kind of confidence that investors look for when entering emerging markets. It shows that Vietnam is not just growing, but doing so in a fiscally responsible manner. Vietnam's strategic position in global trade. Vietnam's rise as a manufacturing hub is no accident. With global supply chains shifting away from China, Vietnam has become a preferred destination for companies seeking alternative production bases. This realignment has significantly increased foreign direct investment, FDI, and further cemented the Dong's role in international trade. In 2020, Vietnam continues to strengthen trade ties with economic heavyweights like the US, Japan, South Korea, and Australia. As exports grow, so does the use of the dong in cross-border transactions, enhancing its global profile and making it a more practical option for international businesses. Tech-fueled financial transformation. Vietnam is also making significant strides in digital finance. From mobile banking apps to blockchain-powered remittance platforms, the country is embracing financial technology at a rapid pace. This fintech boom is bringing more people into the formal financial system and increasing the circulation and use of the dong within Vietnam and beyond. Vietnam is even working on its own central bank digital currency, commonly referred to as the digital dong. While still in the testing phase, this innovation could make international transactions faster, more secure, and more efficient, enhancing the currency's relevance in global digital trade. Domestic trust strengthens the currency. One of the clearest indicators of a currency's strength is how citizens choose to use it. A decade ago, many Vietnamese preferred to keep their savings in gold or US dollars. Today, that trend has reversed. More people are depositing money in local banks, investing in real estate, and purchasing government bonds, all in Vietnamese dong. This shift reflects growing public confidence in the currency. When citizens believe their money will retain its value, they're more likely to save and invest in local assets. This internal demand gives the dong a solid foundation that external factors alone can't replicate. Regional and global accessibility. As of 2020, financial institutions across Southeast Asia, from Singapore to Thailand, have improved access to the Vietnamese dong. Banks are offering better exchange rates and streamlined services, making it easier for travelers and businesses to use the VND across borders. This regional acceptance increases the currency's legitimacy and usability, which are key milestones on the path to wider international recognition. In addition, financial institutions in Europe, the Middle East, and Australia are beginning to offer investment products tied to the VND, particularly for clients seeking exposure to emerging market assets. Trade agreements and international leverage. Vietnam's active role in major trade agreements, such as the Regional Comprehensive Economic Partnership, RCEP, continues to elevate its global standing. These deals not only boost trade, but also legitimize the use of the dong in international transactions. Bilateral agreements with countries like the United States have reached new levels in 2020, enabling more direct trade in VND and reducing dependence on intermediary currencies like the USD. The big picture. A currency with long-term promise. Vietnam's financial landscape is maturing, with reforms targeting corruption, improving tax systems, and enhancing transparency. These efforts are creating a more investor-friendly environment that supports long-term stability. The global investment community is taking note. Hedge funds, sovereign wealth funds, and retail investors are beginning to view the Vietnamese dong as more than just a fringe currency. It's becoming a smart play for portfolio diversification, offering both growth potential and a hedge against volatility in traditional markets. Conclusion. Why the Vietnamese dong deserves your attention. The Vietnamese dong has undergone a remarkable transformation. From a little-known, tightly controlled currency to an emerging market standout, its journey in 2025 is both inspiring and instructive. Supported by economic growth, foreign investment, policy reforms, and a tech-forward approach, the VND is positioning itself as a currency of the future. While full convertibility remains a longer-term goal, the progress made so far is undeniable. For investors, currency analysts, and financial enthusiasts alike, now is the time to pay attention. The Vietnamese dong is no longer a hidden gem. It's a rising force in the global financial system,